What are the three most important things that banks look at when you're trying to get loans to buy real estate? Coming up. Hi everyone, this is Ernesto from AttaBoyCowBoy, and on this channel we give you health and wealth tips to help you be more successful. Now, what are the three most important items that banks look at when you're trying to get a loan for real estate? Item number one, they look at funds to close. So if you're going to buy a house and that payment is $1,000 a month, they want you to have 6 months of payments in the bank or in your investment account. So you have to have at least $6,000 saved up. If you have multiple properties, you have to have that for each of them. So for example, you have 2 properties and they both have $1,000 mortgage payment a month, then they want you to have 6 months, which would be $12,000. Now the good thing is if you're contributing to your IRA or your 401k, they'll count that money because they know you can pull it out if you get an emergency. So try to save up cash, not in savings or checking accounts, because that's a waste of money. You're going to lose money based on inflation, but keep it invested. Especially if you want to buy real estate, buy something conservative like bond funds or index funds or something like that. But keep the money there so that they know that you can make payments. Item number 2, the banks want to know if you're going to be working 6 months from now. Now, in the time of coronavirus, that's a big concern because they don't know if you're going to be laid off. We don't know what's happening because it looks like we're going into a really bad economic downturn. Now, in general, when banks make loans on mortgages, that gets sold to the federal government, which is Fannie Mae or Freddie Mac. So they actually give the banks guidelines, or the mortgage lenders, they have to follow those guidelines if they want their mortgages to be bought or funded by the federal government. So the federal government is always publishing lists of fields that they feel are diminishing or people are at risk of losing their jobs, and they give those to lenders. Now, we're not really aware of that, but the lenders are. So if you're in a field like, let's say you're in acting and you live in a city where all the movie studios just shut down or whatever, they know that. They're going to communicate that information with the lender and they're going to deny you a loan. So they're going to just know that they're going to be looking at the 6-month outcome or outlook for your job to see if it's something that's viable or you're going to have work in that industry. Item number 3, they look at consistent income. Now, they want to know that you have money. So if you're trying to buy a house that's, let's say, $1,000 a month, the mortgage payment, and you have $10,000 in the bank, they're going to say, okay, now does this guy or this girl have steady income coming in every month? So you need to make sure, especially if you're self-employed, you need to make sure you're depositing money into your bank account every month. You need to be able to prove that you have steady income. Banks are almost always going to ask you for bank statements, investment statements. They want to see that money flowing. They don't want to see one month 10,000 going in and then 0 going in the other months, because you could have got that 10,000 from your buddy or from your mom or something. That doesn't prove that you have money coming in. So they want to see that money being deposited consistently. Now, I was talking to this gentleman and he's telling me, well, yeah, well, I own a liquor store and I don't like to report everything because I have to pay taxes on it and all this stuff. Well, that's a whole different subject. That's tax evasion. And if you're an independent contractor or you're doing business where there's cash or something, that's not something that's going to help you if you want to get into real estate. Now, you may pay less in taxes, but you're not going to be able to buy real estate if you're making $10,000 a month and you're only depositing $1,000 and reporting to the IRS you make $1,000. You need to prove on paper how much you're making. You can't just give your word. They don't take your word on it. They want to back it up with financial documents. They want to see your bank statements, investment statements, paycheck stubs, and again, they want to see consistency. And this is big because a lot of times right now, a lot of people are independent contractors and they work for Uber or they work for, a lot of these DoorDash, etc. Or they work for the movies, or they do a lot of businesses. A lot of businesses want to get out of paying for healthcare benefits or offering you pensions or anything like that. So they make you independent contractors. Obviously, it's great for you. You get to manage your schedule, but you don't get a lot of these benefits that people are normally accustomed to. So it's something that you have to weigh and decide if it's good for you or not. But banks don't like that. It makes a lot of ambiguity. So if you are an independent contractor, be aware of that you have even more reason to prove your income. You need to make consistent deposits into your bank account. Not 10,000 one month, 500 next month, to 3,000, 3,000, 3,000, 3,000. In fact, if you know you're going to be slow and you got a big month, deposit some of it this month and save some of it for the next month. That way you have a track record. You can show it to the bank. Usually they ask for between 3 and 6 months of statements. They want to see how much money you're making. They don't want to take risks. So keep those 3 items in mind. It's going to make it much easier for you to qualify for loans and buy property. Again, thank you for listening. And if you haven't already, please comment below. Thank you.